Okay, welcome everyone. We'll start lesson 2. Today lesson will go through LO2. As you know me, my name I'm Jum Satar. If you have any question, please drop me email and I'll try my best to get back to you as soon as possible. During our lesson 1, we discuss about financial statements, how many we prepare. We discuss IAS 1, International Accounting Standard 1, and we discuss about statement of comprehensive income, statement of financial position, statement of cash flow, and statement of change in equity. So, and we discuss about qualities or qualitative characteristics about financial statement. Financial statement need to be true and fair, and it should be prepared in line with the accounting standard. Today lesson will be the key focus, prepare, interpret the statement of cash flow and how we can, which is we prepare under IS7. What is the IS7? International Accounting Standard 7. So anyone knows about IS in Accounting Standard 7? Yes, please. Anyone any thought about? Okay. So IS7 have 3 activities. How many activities? 3 activities under cash flow. Operating activities. Operating. It's mean normal business, day in and out, normal business. What we do, like Tesco, fast moving goods, consumer goods, that's the day in and out business. Then we have investing activities, anything which you invest in the non-current assets, the cash increase or decrease during the period is the investing activity. Then we have a financing activities, how much money increase or decrease in terms of the share you issued or you bought back or loan. It can be long-term liabilities. What's happened in went up, went down. Thus we look under financing activities. So these are the 3 activities we can look around and we can prepare the cash flows accordingly. So be able to prepare and interpret the cash flow. That will be the key in our lesson today. So what is the cash flow? Cash flow statement represent the cash receipt and the cash disbursement, which is mean the cash payment. As a result of the business activity, the statement of the cash flow is very crucial. We can say the cash flow is the lifeblood for any business. Without it, it's very difficult to sustain. So financial statement to determine how well the company's income generates, cash and predicted, which we can look around the predicted the cash outflow. Just please think about and you can look around 5 minutes the cash flow of the chosen company. Okay, any company of your choice. Okay, so we need to be look around the cash flow, and that's is quite crucial, which we can look around the cash flow, cash receipts, and the cash disbursement. As you see in the company of your choice, the financial statement. So predict the financial and they generate the cash in future. So we can look around, as we mentioned, operating activities, which is mean the normal business day in and out, the company is doing it. So that's we do. So the starting point of your cash flow, you can get the figures from the income statement and look around the cash in and out, because always we have to make some adjustment which will go through. The change in the short run asset, current asset versus current liabilities. So that's the key. We can look around trade receivable, trade payable, last year, this year, what's happening, increase and decrease, what effect would be at the cash. Investing activities, yes, we long-term asset change, disposal of assets, revaluation of assets. So revaluation won't be change the cash itself or the depreciation of the asset. So financial activities, we can look around the change in the size, composition, contribution to equities, the loan. That's which we look the financial activity. So cash flow So let's please, we can look around and watch the video about the cash flow. So that's good to be. So spend few minutes, please. Okay, I'm stopping and we'll start again. Okay. Thank you. Thanks for watching. As we watch it in the cash flow activities, cash flow videos, we look around the operating activities of the principal revenue producing activities of the entities. Cash flow from the operating typically include the cash flow associated with the sale, purchase, and other expenses. The CEO, the chief executive of the chief executive officer or director of finance, direct and indirect presentation of the cash flow. Direct presentation of the cash flow, these are the two methods of preparing. At the listed the cash flow, cash in from the sale, cash out from the capital expenditure. This is simple but rarely used method. Indirect presentation is more common. So operating cash flows are presented as a reconcile from the profit to the cash. So this is also known as operating activity or reconciliation in of the cash. So cash flow from the investing activity include acquisition or disposal of the non-current asset. Other investment including the cash equivalent. Investing activity difficulty relate typically is related to which we can look around property, plant, equipment, increase and decrease of the non-current assets. So cash spent on the purchase is the called capital expenditure. So what is the capital and revenue? A couple of you already. Anyone please? Oh, yes. So what is the capital expenditure? Ah, you're right. Yes, capital expenditure means spending money on the non-current asset. When you buy it, you spend it, and this is a capital, is your asset. Capital expenditures goes in the balance sheet and the revenue expenses, which is day in and out, which is mean decrease the value of not really. So any asset which is spending money like cleaning, maintenance expenditure, that's your capital nature, as that's your revenue nature expenses, but they are not increase the value of the asset. Okay, so financing cash flow from financing activities are the activities that result in the change in the size, composition of the equity, capital, or the borrowing of entity. So financing cash flows typically include the cash flows associated with the borrowing, repaying the bank loan, issuing the buying back shares, and the payment of the dividend is also treated as a financing cash flow. Okay, yeah. So this is the consolidated cash flow of the right? The example we can look around 2 years, 3 years figures. We can look around under the operating activity, what's happened net in the cash flows. Yes, so the cash being went up, you will see the easier the change in the cash flows, and we can look around the cash outflow during the financing activities we have, and then sorry, under the investing, and if we look at the financing activities, we have a positive cash flow. So plus we look, net, we can add the positive minus negative under three activities plus opening balance. If you make that should be equal to the cash balance which is given in the balance sheet. That's we can do the reconciliation of the cash which is being used under these activities. Anyone, any question? Okay, let's move to the next. Okay, so there are two methods of producing cash flow, direct, indirect method, as we mentioned. Direct method, which really we use now, which is individual cash that is received or paid and piled up, and the total resulting the cash flow. Indirect method, which we use the change in the value of current and non-current asset and liabilities, and we can look around the what's happened during the operation. Under operating section, we look the investing. So here is the layout, so we can look around operating activities, cash received from customer, cash paid to supplier, implied compensation, others. So we can reconcile cash investing, cash from financing, and we can say this is the total cash. But when we look in the indirect method, operating net income, which we can find the net profit from our income statement, our recall statement, then depreciation is a known cash expense because the first place it was minus from the profit and loss account. So we adding it back, decrease in the receivable will increase the cash flow, or decrease in, so we can look around increase and decrease in the cash flow. So decrease in the receivable mean your receivable went down, but your cash balance. So dual effect, double entry bookkeeping. Increase in inventories. If your inventories increase, of course, you're not paid money to your suppliers. So we can say the cash balances went up. So decrease, so increase inventories. Yes, so we can look around the effect of the on the cash. Your cash is tidy up. We can look around the decrease in the prepaid, and then we can look around that. So we can make adjustment accordingly, and we can look around investing activities. So sales of the land, if you are selling, if your non-current asset, the value of the cash will come, and when you dispose of the asset, cash will come. If you purchase your non-current asset, the cash will go out. So that's the inflows and outflows. Financing activities, yes, if you issue more shares, the cash balance will be positive. If your cash flow, if your shares when you paying, buying back the shares, of course, what will be happen, the cash balance will be low, so on. So we can reconcile opening balance and we net cash from all these activities, and then we can look around these. Okay, so we can look around, prepare the statement of cash flow. So please, it's a good video to watch and do, and I'll give you a few examples which we can look around in our assignment. Adjustment net cash flow with the changes in the balance sheet, account arrived and account cash generated, operating activities, like the trade receivable last year, this year, the trade payable this year, last year, inventory. That's all we make adjustment, and then we can look around, what's happening in the cash under the operating activity. Okay, so that's the key really. It's the reconciling the cash flow. Anybody, any question? Okay, guys, let's please look this. Look the key points. Okay, guys. So well done. Thanks. Let's we move to the 2.1. It was the let's do the practice on the Excel spreadsheet. You can you need to for the cash flow statement, for make the cash flow statement and preparation of the cash flow statement, interpretation of the cash flow statement, which we can look around. So what we can please the Excel template is available on the Moodle as well, which we can use it. So that's quite good to look around. Okay. So that's which we need to be the so cash from operating activities can be compared to the company net income, determine the quality of. So what I'm going to do, please, is good to I'm going to guys send you in the chat box the handouts. Okay, so you can look around IS7, look the question and the answers. If any point you not get it, you can please ask for me, which we can discuss in the next lesson. So net cash from operating activities. So I'm looking, so which we the cash from the operating activities we have. Then we have purchase of non-current assets and all, which we making adjustments. So this is the example which we can use it. And then you have additional reconciliation adjustment, which we have to do. And then these figures, and you've been asked to, you can check the balances of the cash flows. And this is the example. Then you look the example one, you've been given and we are making adjustments. Yes, so last year, this year. So this is the balance sheet, and this was the income statement. You will see here profit for the years and profit. So from this, we are preparing the cash flow statement. So this type of the layout. So net cash from operating activities, we can and we can make the adjustment. So if you look at example, you've been given cash, we've been given the financial statement, statement of comprehensive income, statement of financial position. These two statements required to prepare the cash flows. Then from this example, you've been looking the item which we need to be aware of, these being listed, and then you have example. So these are examples. You go to the tutor copy and look the answers of these examples. Okay. So first of all, the just generic example of the layout. So you've been given the two statements and you've been asked to prepare. So what we did, we started profit from operation before tax. So last we put in the figures that was given in the income statement, which is you will see the profit from operation. So we picked the figures from there, and then depreciation normally is a non-cash expense. So last year, this year, how much the depreciation figures change? So we first place we minus it, now we adding it because that's not a cash expense. So the we can just make it, if you done reverse transaction. Inventory last year, this year, so that can be figures we can look around in financial position. So 11,000 and 7,000. So there is a difference of 4,000. So change 4,000 about inventory. Decrease in receivables. You will see when receivable decrease and cash increase. Increase in the trade and other payable. Of course, you're not paid it yet. Liability went up. The cash is increased. Yes, because the positive effect on the cash. So these we done interest paid. Yes, initially we make the adjustment there. So we can look around because you're starting before operation. So this is the finance interest you paid as a cash, income tax you paid during the year. And that's the cash net cash from is a positive balance. Then we look investing as well. So that was there. And then we look the investing activity, the change in the non-current asset, financing activity. So all the working given here, please. So you can look around the T accounts we prepared to look the calculation. And so good to be go through, look around. Any figures you not understand, please let me know so I can we can discuss in the next level. Anybody, any question? No, no. Okay. I'll take you back to our lesson. Okay, so what is the cash flow? Tell us the cash flow operating activities we can compare higher than the last year, this year. So that we can make a lot of decisions and we can make adjustments accordingly, and that is very useful. Then we have 2.2, interpret the significant entity performance. So performance we can look around under operating, under financing, under investing. What's happened last year, this year. So if we look, the real example, we can find the Tesco, let's, Tesco annual report. And I can show you here, if you go, hope you can see these, in your, and look there, the statement to interpret. Yes, so we have here in the content page of the report, if you look the financials, where we have a financial. So here is the cash flow, which is given under the page, the group income statement, group cash flow is 124 page. If I'll go back to 124, 26 page, which few pages up and down can be. So look the cash flow. If you look under operating activities, you will see here the cash generated from operations in 2022 and 23. So that was 4608, and in 2023 4498. So cash, and if you look the net cash flow 3757, 3722. So cash flow is dropped by good million. So take the difference between two numbers, and that can be interpretation. This can be huge impact. And then look investing activities. So cash outflow is drop under investing activities because we sold more non-current assets. Sometimes it's good because you bought more assets. The cash went out, but in the non-current asset will give you the economic benefit in the long run because you have infrastructure in place. Huh? So under the financing activities, you look around, the cash went out as well, which is increase, which means you settle your liabilities or commitment. The net cash, the cash equivalent, which we have a negative, and plus your opening balance that was positive. The difference is came 34 negative. If you look the cash equivalent, so we can look around, it was end of the year, what balance you have, 15,665 and 17,771. That was last year positive, and this year is positive, but it's dropped. So that gives the overall the interpretation, so we can argue on it and we can write the company where perform well, where not perform well, has the increase or decrease for the period, how much increase in the material and fire inventories and enough, yeah, tax being paid, what being settled, liability. So these are operating activities. You can explain what happened with them, investing activities, what happened with them, and financing activities. So that can be interpretation. Key point, net increase and decrease in the cash equivalents, which we can look on overall increase. We can look around the final balance, cash mean the cash in hand, cash deposit, cash equivalent. So benefit of the cash flow and the consequences of about difference, which we can profit in the cash, provide, additional information, which we can accept the current liquidity, allow, which we can estimate the future cash flow, determine the cash flows. Drawback of the cash flow, the statement of the cash flow is backward looking. User accounts are particularly interested in the future. No interpretation of the cash flow is provided with the account, but we have to really look around their balance sheet and we can interpret ourselves. 2.3, make the justification recommendation based on the organization, what's happened, cash generate, start with the profit before tax, add it back, so these are all the key adjustments, please. If we can do the interest and the tax, we can look around investing activities, we can look around property, plant, equipment increase and decrease, financing activities increase and decrease, what is the balance of the cash flow increase and decrease. So profit and the liquidity, the accounting concept accrual basis, we don't do the accounting on the cash basis. So like the matching concept, the accounting concept under IS7 property, which is mean we provide the look around the activities, we look the cash, and the liquid position of the company, and the statement of the cash flow are important statements for the user. They help the user to look around the liquidity and solvency position. We can help user to assess the financial adaptability, help users look the future, what will be impact on the cash flow, if it's the past trend, can be future trend, and look around what decision they make, in the past that improve the cash flow. Cash flow are the objective, the cash flow is a matter of the fact, where the conclusion of the profit is subjective, we can indicate. And then if please, it's quite good to be evaluate the significance of the information within the statement. A good analysis will examine the statement of the cash flow in detail, look the reason behind the movement, and comments, on how the entity's performance. We can look around updating activities, cash generated from operation. Yes, what's happened, that to equity, cash from operation, cash generated from operation due to the closer to cash generated operation from which we can look around time, that we need to be. If we can, these are the full point, irrecoverable debts, how much we have, that in huge impact on the cash flows, positive cash generated from the operation, which is quite, useful. I mean, we can pay to, but sometimes maybe that we are positive because you're not paid cash to the suppliers. So it can be supplier can be demotivated. Maybe you're not paid the dividend on time. So your cash balance is went up, but actually these have the impact, not only the financial, you have to look around the non-financial impact. You can look around the financing investing activities. For example, the sale of the asset can be good thing for those assets are being replaced. But however, the stated earlier, the selling of its premises is not a good idea. Maybe for time being, the cash balance is positive, but in the long run, the poor cash management, the credit control, that's also your credit control policies we can review. Financing activities, maybe you can look around debt to equity ratios as well. That's a huge impact, on the profitability of the company. So we need to be look around these, the pros and cons all before you making the positive, the negative impact on the that can play the key role in the company's affairs. So maybe the long-term liability is good because you borrow money due to buy the property, plant, equipment. So that can be positive impact, that can be positive impact on future. So we need to be look around these, very good uh, impact can be. So you can look around the entity performance. Distinction criteria can be look around. Always low M is a crime, fail in life, no crime. So we can look around the distinction, evaluate the usefulness by adding the advantages of disadvantages of. So can alert the user the liquidity problem, show how well the badly profit is converted into the cash. Cash in matters, the fact easily manipulated, not affected of the accounting policies estimate, and can use it to predict the future cash flow. Easier to understand profit for some users, but the standard heading enable user to compare the cash flows. Limitation, cash balances can be manipulated by delaying the payment tactics. Yes, so these, for looking not when we preparing the cash date, and we can say, come on, we're not making now the cash position look. The difference between the profit and the cash, is clearly indicated. So maybe we can, through the credit sale, we can increase the sale. But what about if you're paying, these in? So we need to be look around these tactics and the financial management. And then please, you've been given the proposed dividend, dividend receipt, bonus issues. These are also question mark for the cash flows which we need to be look around. So look the dividend, the depreciation is expense. So these are please, it's good to be go through these quizzes which we'll go through next lesson. And I'm sharing with you on the WhatsApp group. Please look around these questions about the cash flows and answer these. Some of the quizzes, those are also given under our in the handout. Okay. So today lesson we discuss about the cash flow. Cash flow has the three activities. investing, financing, and operating. Those we can look around in our lesson, and that's which is quite crucial to look around. That's help you to prepare your cash flows. Okay, so let's please spend a few minutes to look around these handouts, which I'm going to send you. Cash flow. Okay, guys, so I send you the handout, so please go through the before next lesson, which I shared on the WhatsApp group. So look around the cash flow statement. And the next lesson will go through LO2, LO3. So please, it's good to be look around LO3 before joining our next lesson. Thanks, attending, and hope I'll speak to you all during our next lesson. Thank you. Have a lovely weekend. Bye bye.